put your budget together, Martha. How many times I got to tell you? Hi, welcome to the Money Tip Podcast presented by Fully Funded Life. My name is Joe Sengel, and we're committed to helping Martha and you win with your money and to be able to live your fully funded life. Today, we're going to talk about something really important, and that is tax refunds. And now I'm a spender, and so I see the word fun right in the middle of the word refunds. And, you know, if you take fun out of refund, you're left with red, and being in the red financially is always a negative event. So let's make sure we keep the fun in refund. And part of keeping the fun in the refund is knowing IRS rules. And there are some new rules in 2024, and I wanted to share them with you. I ran across a fantastic article, a summary of some of the major rules changes that is documented on CNBC. CNBC is a wonderful business news channel. Our TV in our office stays on that channel whenever I have control of the remote. Sometimes it gets other things on there like March Madness or the Masters when that's happening. But most times it's CNBC. Looking at what's happening in the market so that we can always be aware of right now relevant information that affects you and me in our fully funded lives and our journey to live them. This article, we will put it on the screen as we look at different components, is about being your own advocate by knowing these 4 changes for 2023 taxes. I'm going to give you the single angle on it as well. One of the first things that I saw in here that was very important to me is that tax brackets got wider. Now, the federal government has certain connections in law that allows the IRS to change brackets relative to what's happening with inflation. As you and I both know, inflation has happened. It is also very important because as they adjust these, it allows them to capture more taxes or to reduce taxes so that the tax burden becomes neither too troublesome or punitive or too lax on various individuals. Of course, they can't get it exactly right. Of course, we would all love no taxes, but I do like really nice roads to drive on and really good infrastructure. So, you know, a lot of the stuff works for us in a very positive way. Let me tell you how tax brackets got wider. In fact, we'll put a couple images on the screen. This first image is the marginal tax brackets if you're married filing jointly. So Joe and Jen Zengel are this status. We're married filing jointly. And you can see that if it's $22,000 or less of taxable income, so this is known as your MAGI, M-A-G-I, your modified adjusted gross income. If it's $22,000 or less, it's 10% of the taxable income. Now, if you make $22,000 to $89,450, well, you know, you're going to have to pay more. It's going to be $2,200, which is 10% of the $22,000, plus 12% of any amount over $22,000. If you have a modified annual gross income of $89,451 up to $190,750, that's going to cover most of us here now, is $10,294 of taxes. That's at 10% on the first $22,000, 12% on the next bunch, and then 22% of the amount over $89,450. If you make more than $190,751, well, good for you. You're going to get to pay $32,580 of taxes plus 24% of any amount over $190,000. So you're losing $1 out of $4 for any dollar made over $190,750. Get fired up. Now, some of you are looking at that and saying taxes owed of $32,580. I don't even make $32,580. I understand that completely. Okay, so now look at this next one. Once you make over $364,201, so we're talking about business owners, we're talking about surgeons, we're talking about attorneys, we're talking about highly compensated professionals. That's a lot of income. That's $74,208 of taxes plus 32% of any amount over $364,000. And then once you exceed $462,501, well, up to $693,750, you're going to pay $105,664 plus 35%, $1 out of $3, more than $1 out of $3 for any amount over $462,500. If you make more than $693,751, you'll pay $186,601.50 plus 37% of any amount over a modified adjusted gross income of $693,750. Get something up, fired up, sad up, crying up. I'm not sure. That's a lot. Now, listen, I like paying taxes, but I'm going to legally evade any taxes that I can, such as investing in tax-deferred retirement savings accounts and things like that. But I'm going to pay all the taxes I owe. So now I am going to vote that we use those dollars well. And I want to show the next chart here. This is the marginal tax brackets for those of you that are single filers. So you file singly, you can see those numbers there. And you can kind of screenshot that so you can see it. The source of that table is from the IRS. Now, one of the things I just wanted to note that's really big is there is a bigger standard deduction. So in 2022 tax filing year, it was $25,900. For the tax year, which we're getting ready to file, it's now up to $27,700 if you're married filing jointly. So it's went up a total of $1,800. Now, if you're a single filer, it went up $900 from your filing last year for the year 2022, $12,950. Well, when you're filing here in 2024 for the tax year of 2023, it's up to $13,850. Now, I want everyone to hear this. Are you listening? This higher standard deduction, this came into place with the so-called Trump Tax Act of 2017. It had a sunset clause on it that said it only went for 10 years. So in 2026, 10 years later, this higher standard deduction, if there is no action on it in Congress, it's going to sunset. It's going away, which will increase the tax burden for all Americans. They want that to happen so they can collect more taxes. My question is, will they handle that properly? What do you think? You can leave a comment on what your thoughts are. Now, keep it clean. All right, so Form 1099-K reporting changes are delayed. This is another big deal. Form 1099-K is a new form where the government is kind of frustrated about all these different apps, Cash App, Venmo, PayPal, all the different ways that people are transacting cash back and forth, where they were wanting to say that if you had a single payment of $600 or greater, that would trigger a Form 1099-K, which would report all those payments to the IRS. Now, that was supposed to happen in 2022. As you might have imagined, that caused some frustration to happen. The old limit was that if you did more than 200 transactions worth an aggregate of $20,000 or more, you would have to get a 1099-K. However, you need to know that if you're receiving payments through Cash App or Venmo, and they may be $20 here, $50 here, $100 here, right? Maybe you're a photographer getting paid for that. That is taxable income. You need to report it. You need to report it. I report all of my income, all of it. I have plenty of chances not to. We sell books at product tables. We get cash transactions. We report every penny of it. I can't keep up with getting cash transactions that I don't pay taxes for. So I'm just going to pay taxes on all of it. I encourage you to do the same. So all business income is still taxable, as it says in the article. They have delayed this reporting requirement for another year. I don't know how long they're going to keep pushing this, but business income is still taxable, warns Tommy Lucas, an Orlando, Florida-based CFP and enrolled agent at Moysan Fitzgerald Tamayo. If you want to follow the law, you still got to report it, even if a third party is not. So it's really important for you to think about. I would really encourage you to report it. Now, a couple of tips that I would give you as we wrap this up. Do not rush to file your tax return, especially if you don't know for certain that you're accounting for all of your income and all of your potential deductions. Many people fail to report certain deductions that they could have taken credit for. And also, they don't account for all of their income. And they get these documents a little late in the mail and they're like, oh my goodness, I already filed because I wanted to get that tax refund. You're going to have to file a amended return. If you do not, hey, a lot of that income is going to be reported to the government. And someday later, that's going to be a challenge for you. If you have a professional tax preparer, tip number 2, I want you to go ahead and try to do your taxes yourself. Pull up the Form 1040, start filling it out. It will do several things for you. One is it'll make you very grateful for your professional tax preparer. 2, it will educate you. It will help you understand how the tax codes work, how the tax laws work, what is helping you, what is benefiting you. And when your tax preparer finds additional deductions that are legally available to you, it will help you understand that what you thought might have been an expense of paying a professional tax preparer might have been a really good investment because of the additional tax refund they got for you or the reduction of taxes you owe. My final tip number 3, is to pay what you owe. It simply is not worth the disaster that is going to happen when the auditor arrives on the scene. When I do coaching for people, and this happens a lot for people that are so-called gig workers, 1099 subcontractors, small business owners who failed to pay their estimated quarterlies, they did not pay taxes, did not save money for taxes, and they find out they have a big, giant amount owed, and they don't have any of that money because they just weren't aware of how the tax code works. It's a disaster. Make sure that you're aware of what you owe and you pay what you owe. So listen, tax laws are ever changing. Keep tuned to the podcast. We will communicate them to you. A great way for you to keep up with everything that's going on in the world of finance and get that financial education that you deserve is to be a part of Fully Funded Life. Check it out at fullyfunded.life. We'll be happy to serve you there so that you can win with your money. Have a great week, everybody. Hey everyone, Joe Sangel here. Thanks so much for watching this episode. Hey, I encourage you to check out our other videos that are available here. If you like this, hey, every single week we're producing new content that is to help you with right now relevant information. So make sure you click one of the links and check out some more of our information. I think you'll be so glad that you did. I know your wallet will be glad you did.